Today, our stock analysis will focus on Federal Home Loan Mortgage Corporation, ticker FMCC, which is commonly known as Freddie Mac. Now, this does trade as a penny stock, but not because it's a bad business or company, but following the 2008 financial crisis, Freddie Mac went into conservatorship with the US Treasury for the bailout. Now, since then, Freddie Mac has repaid all their loans back to the Treasury, but the Treasury has not freed the company from conservatorship. In fact, the Treasury is still able to receive all the dividend payments while none of the investors receive any. So, this conservatorship is what's causing the company to trade as a penny stock, as the Treasury is the one receiving all the profits. Now, there have been a few lawsuits filed by investors over the years, but to no avail. And though there was one minor victory about a year or two ago for improperly sweeping up the company's profits to the Treasury, but that award was only a couple $100 million and nothing significant. But for more information on the conservatorship, refer to their yearly 10K, which provides a good amount of information. And there's no definitive date for when the conservatorship will end, and another reason why the company trades where it does. But when the conservatorship does end, the stock should trade at their fair market price, which would be significantly higher than where it is today. Now, I'm not going to spend too much time on their financials, but just want to show that they are a legitimate company and that they do make a good amount of money. Over the last 3 years, revenue exceeded $21 billion, and the years before that, well over $10 billion. And then net income, typically around $10 billion, give or take, depending on the year, and then free cash flow. Well over $1 billion each year. Some years slightly down. They did have 1 year back in 2015 that was negative, but besides that, typically well over $1 billion. So this is a company that's able to make money. Now let's jump down and look at their valuation. This valuation presumes Freddie Mac is no longer under conservatorship. And with that, starting here in the top right, the net income CAGR over the last 10 years has been just over 3.5%. So I am using a 4% short-term growth rate, and we will make an adjustment to this just to see how it impacts the valuation. But right now, we're using 4% over the next 10 years with a 10% discount rate and a 3% long-term growth rate, along with a 75% margin of safety. Now, this gives us an intrinsic value of $31.50, and with that 75% margin of safety, brings it down to $23.63. Now, the stock currently trades around $1.50, and that's all because of this conservatorship with the U.S. Treasury. But once that's lifted, the stock price should jump up and trade at a fair market valuation. And if it was trading like that, I would look to buy in around this 23, maybe a little higher price target. Now, let's just say this is trading at that fair market price, but my 4% short-term growth rate is a little more bearish. So let's just tick that up to 6% and just see how that impacts the stock price. So 6% short-term growth rate increases the intrinsic value to $36.85. And with that same 75% margin of safety, brings it down to $27.64. Now let's look at the other side of the coin. Let's just say my 4% was a little too high, and let's drop it to 2% and see what happens. And with a 2% short-term growth rate, intrinsic value drops to $26.98. And with that 75% margin of safety, brings it to $20.24. And as I mentioned, the stock currently trades at around $1.50. So if you are going to invest, you need to have a more of a long-term outlook, because there's no definitive date when this conservatorship will end. And it should also be a small amount of your investment money. You don't want to put too much money in it, because there's always a chance that potentially the Treasury fully takes this over and you lose all your investment. So just keep that in mind. And I have invested in this stock for a couple years, and my thesis is eventually the conservatorship has to be lifted. It's been 15 years or so now. So maybe it takes another couple years, maybe another 5-10 years, but eventually it would need to get lifted, I believe. But next, I just want to show you a recent comments that Bill Ackman made during his earnings call. So let's jump over and we'll take a look at those comments that he made regarding Freddie Mac. Here's Pershing Square recent earnings call transcript on Seeking Alpha, and we're going to jump down towards the bottom of the meeting where Bill Ackman discusses Freddie Mac and also Fannie Mae, which is in a similar situation. Now, Ackman was one of the investors to file a lawsuit several years ago regarding the conservatorship with no success, but still owns the stock. And we can see here, he does say over the last 18 months, this has been his best performing stock, which is probably true as the stock is up nearly 300% during this time. And he does feel that the stock price today is a proxy for a probability of Trump being reelected. And a little further down, he does believe that if a Trump is reelected, his administration might look to take steps to release Freddie Mac from conservatorship. So I will leave a link to this article in the descriptions below so you can read for yourself this entire section if you're interested in the stock. But let's move on and we'll look at my purchases into Freddie Mac. Here are all my investments into Freddie Mac. We can see I started buying in back in November of 2021 at around $1, give or take. And those initial investments just below $1 are up 67%, while the ones just above $1 are up around 40%. Now, if I put my money into the S&P 500 on these days, I'd be up around 14% or 17%. So far, Freddie Mac has outperformed the S&P. But again, this is a little bit of a speculation play, and my overall thesis is that eventually Freddie Mac will no longer be in conservatorship, and the stock price should jump up dramatically. And overall, all my purchases, I'm up about 50%, while if I, again, had my money in the S&P 500 with dividends, I'd be up to over 16%. And my cost basis is just over $1 at $1.03. I'm going to scroll down and just look at all my buy-ins. And you can see here, back in September of 2022, it got around 50 cents. It actually dropped lower, got into the 40 cents and even 30 cents range. I think as low as like 35 cents. The lowest I bought in was at 52 cents. And then I held off buying in until early this year in March. I made a few purchases recently in March, April, and then in June. And then down here, you can see the overall investments. So far, I invested around $6,000. So again, if you're going to invest, it should be a small portion of your portfolio, something you're willing to keep in there for several years at least until the conservatorship is lifted. And that may take 5-10 years. So hopefully it doesn't take that long, but you have to be willing to keep it in there for an extended period of time. And also accept the fact that this could go down a lot as well. I know it's at about $1.50, but this could drop to well under $1. And we can see the stock price over the last 52 weeks as low as 40 cents and as high as $1.75. And we can see the overall gains for me is about 3,100. So let's move on. And next, we'll just look at my portfolio's overall performance. Here's the portfolio's overall performance, and Freddie Mac is a smaller position size, and the ticker FMCC doesn't show up because of that, but when hovering over the box, you can see the window pop up in the lower right corner. And a few others will point out Builder's First Source, BLDR. This is a newer investment for me, and the price has dropped since first buying in, and I recently added to the position with the lower price. Then Smith & Wesson, SWBI. They should be having their fourth quarter results coming up soon. I'm looking forward to that. T. Rowe Price, TROW. This is a position I've owned for a while, and I keep telling myself to sell out of it, but haven't done so just yet. And then one of my largest positions, Berkshire Hathaway. I plan to hold on this for the long term, even after Buffett is no longer in charge. And then lastly, my Bitcoin ETF, BITB, the price of Bitcoin has finally ticked up, and looking to see how this plays out over the next year or two with the recent halving events. So I hope you enjoyed this video, got some useful information. If so, consider subscribing, and hope to see you next time. Thanks for watching.